Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. This is part 2 that I'm talking about inflation, facts about inflation that are creeping in already, and signs that inflation could get much more severe. All of these videos are add-ons to the Coming Storm video where we talked about big picture, what's happening and going to be happening in our economy that's going to directly affect your world. So if you haven't seen that video, I highly recommend you go and watch that. It's free. There's a link right next to this video where you can do that. By the way, if you notice, I've changed. I had my battery go out again in the middle of the shooting of that one, so it's a new date for me, but I'm going to finish up this series. And let's jump right in. Inflation is nearing 10% using the pre-1980 methodology. So we talked about in a prior video the fact that the government was looking to change the way they, or talking about it, changing the way they calculate CPI. Well, they have done this in the past. If you use the old method the government used to use, we have very close to 10% inflation today. Banks around the world are facing a $3.6 trillion wall of maturing debt over the next 2 years, according to the IMF. It's a massive amount of money that has to be rolled over or placed, and so there could be massive bank collapse there if they're unable to do that. The IMF also knows that a lot of governments are really in trouble, including the US and Japan. Of course, these are things we've been talking about for a long time, but the IMF is publicly noting that. The BRIC countries, Brazil, Russia, India, China, and including South Africa, met in China recently and are calling for a new world currency again. So again, this is a very dangerous thing. If the world decides that they no longer need all those dollars that are sloshing around all over the world, they all use dollars to do trade in. So if one country sells something to another country, they transact it in US dollars, even though it's not their currency. It's because the US dollar is the world reserve currency. If that stops being the case and all those dollars come flooding home, that's a very dangerous thing for the value of your dollars. S&P put US on negative credit watch for a potential future downgrade. So this is a big deal. I actually don't think there's any way that they would downgrade the United States. It would immediately cause chaos, and I just don't think they would ever do that. They're typically behind in a lot of their downgrades, and so they're a little behind on even mentioning this. I'd be surprised if they did it, but they are threatening it, and so that's something to watch. Most of the world is trying to combat inflation. Inflation is everywhere, rampant throughout the world, because the Fed has printed so many dollars. Other countries are doing it too, but the chief cause of the world, because the dollar is the world reserve currency, the fact that we're printing so many, that inflation is happening everywhere. A lot of the countries are doing something about it. They're raising interest rates, they're doing other things to try to combat that. We're ignoring it. And US households are receiving more from the government than they are paying in. 59% of Americans are receiving some benefit. That is a crazy number. If most of the people are receiving money from the government, if the amount of money that the government is paying directly to people is more than people are paying, that doesn't even account things like the military, which is a massive expenditure. But the amount of money that people are receiving is more than they're paying in. Obviously, that doesn't work. Let's see, Chinese officials say that about $1 trillion of US dollar exposure would be right for them. They're way over that. They now have $3 trillion of reserves. Most of that's US dollars. Again, if they start dumping or dump in a big way, that's a serious problem for the United States. And they have all kinds of officials warning and saying that they're going to be doing that. They're in a difficult position because if they dump too much too quickly, the dollar would collapse, and then the rest of their holdings would collapse, and they'd also lose one of their primary markets. At the same time, they realize that they're accumulating something that's going to be worthless, and they don't want to do that. So they're trying to walk the line between not putting themselves in a worse position, but also, doing what's right for the people. So they don't want to collapse our dollar, but they also don't want to accumulate ridiculous amounts of US dollar currency, which they clearly see is going to be worth very little in the future. Recently, 10 Southeast Asian countries, including China, Korea, and Japan, or in addition to China, Korea, and Japan, we're discussing an infrastructure fund and also new avenues for currency reserves. So again, all these countries are accumulating far too many dollars, and they want to have something else to put their money in. They'd all love to hold a lot more gold, but the market for gold is so small that if they try to buy too much, the amount gets pushed up. So they're trying to figure out how can we accumulate something other than dollars. So again, this is very negative for the US dollar. The federal government is doing exactly what it did to destroy the first currency. The United States' first currency was called the Continental. And what happened is they started borrowing a bunch of money and they couldn't pay it back, so they just printed money to pay it back. Well, the currency hyperinflated away and went to nothing. Well, now our government is doing the exact same thing it did a couple hundred years ago. It's using printed money to pay off the debt. Now they're going to stop that here in a couple weeks, but there's no chance Bernanke is going to go very long without doing more of that. That's what destroyed our first currency. So if you think, oh, that happens in other countries like Zimbabwe, but it wouldn't happen here, well, it has happened here before. And speaking of Zimbabwe, ironically, they're the country with the worst hyperinflation ever. And now they don't even have a currency. They use US dollars, and they're seeing the risk in this because they see how foolish we're being, that we're doing a lot of the same things that they did. So now they're talking about getting out of using the US dollar because it's too risky and starting a gold-backed currency. So that's fascinating to watch, to see if they come out with the first real currency in the world in a long time. Federal Reserve, a couple Fed presidents continue to speak out against Fed policy, but they're in the minority and basically no one listens to them. They don't get their way. They're saying exactly the same things we are, but they're not Ben Bernanke, they're not the power structure of the Fed, and so even though they have wisdom, they're not being listened to. Bernanke took credit for the highs in the Russell 2000 here in the last couple months. That is crazy. He's bragging about small cap stocks. So is he a little day trader, or is he the chairman of the Federal Reserve? It's ridiculous that he's doing this, but this is an important sign to see. He's constantly been taking credit for the high stock market values and talking about how important those are, and that he can fix America's economy with high stock prices. What that means is if stock prices continue to fall as they have been falling the last couple of months, and I think we're set up for a pretty serious crash, well, it's not going to be long before he's going to step in and start buying more, doing more QE3 or whatever they call it, because he's taken ownership of stock prices. It's a position he should never be in. It's not part of the Fed's mandate, but he's doing it. He's very openly talking about this, so it's a dangerous thing to watch. Okay, the New York Fed had a report. This is fascinating. I mean, at the same time that Bernanke's out there saying that there's no inflation, the New York Fed puts out a report that says 84% of items in the CPI, the Consumer Price Index, saw above average inflation over the last 7 months. So you have a bunch of people out there saying there's no inflation. That's simply because housing and a couple other things are going down. Yes, housing's got severe deflation. We've been talking about that for a long time. But 84% of the items in the CPI are seeing above average inflation. So the things that we actually use in life are going up. You don't know that. You go to the grocery store, you know what's happening. Okay, European Central Agency downgraded European Credit Agency downgraded the U.S. Treasury credit worthiness. So we had a Chinese one do it. We had a European one do it. I think it was out of Hamburg, Germany. I hadn't been familiar with them before. The big ones, of course, are in the U.S., but ones that aren't tied to the U.S. are saying, look, the United States is taking on tremendous risk, and they're never going to be able to pay back what they're promising. A Chinese agency said that the U.S. is already defaulting on the debt by printing so much. So it's a secret default. Much as the U.S. credit agencies recently said to Europe, if you make bondholders restructure their debt and elongate it, so they 7 years they have to continue to lend that money to Greece. Well, that's basically a default. Well, the other credit agencies are saying what we're doing. We're just printing money to buy our own debt. That's a default. It's not technically a default, but to any sane person, that is a default. European Central Bank admitted recently that core inflation is no longer useful and they should go back to tracking headline inflation. Well, hello, that's what we've been saying here for quite a while. That's fantastic that they're kind of waking up to that. Again, we need our own country, our own Fed to notice that as well. USA Today issued a report saying that the real U.S. debt is $61.6 trillion because they're including things like Social Security and Medicare and other commitments, Fannie Mae, Freddie Mac, FDIC. Those things have to be backstopped by the U.S. taxpayer, and they're not being accounted for. If the U.S. was a company, it would have to be accounted for. And actually, the U.S. does run this. We've talked about this before. The U.S. runs really about a $5 trillion deficit every year, which is massive. No way it'll ever be paid. So this isn't anything new. If you've been following us for a while, or from others, you've heard about these things. But it's interesting to see the USA Today came out and said that's one of the biggest newspapers, if not the biggest newspaper in the country. So these things are getting a little more mainstream and people are starting to understand. Again, if you haven't watched the Coming Storm video, I highly recommend you do that for free. Thanks. Hopefully it won't be as long before the next series of videos that I put out. I hope you're well and prepared, and reach out to me if you need to look into anything more in these items. God bless you.